What's up, everyone? It's Karthik with MoneyVest. So this is going to be a full update on both Tesla and Palantir. We haven't talked about these two stocks for some time because we've been so focused on the macro. And I know how much you guys appreciate and really like the technical analysis and overall breakdowns on individual stocks as well. So make sure that you drop a like. All I'm asking in return is that you share this video with your friends and family, other traders, investors who may be interested in Tesla or Palantir. And even if they're not interested, make them interested by sharing this video. And of course, drop a like on this and subscribe if you haven't already. We cover fundamental analysis, technical analysis, macroeconomics, options trading, swing trading, long-term investing. Everything related to investing will be covered on this channel. So first, let's talk a little bit about Palantir's cost basis among investors. So we are sitting at a cost basis collectively for all shareholders at just over $26.44 with the current price back over $30 a share. We've got about almost 84% of investors currently profitable, with a small sliver of investors still in the red, about 16-17% right now are still down on their Palantir shares. And this right here is going to be Tesla. Since Tesla is significantly lower from its all-time highs, we've got a cost basis that's sitting at closer to $219, which makes only 50% of investors currently profitable on Tesla. Tesla actually had a very strong day yesterday, up over 4%, getting back up to almost $220. And I think pre-market right now it's up another 1% because of some very big updates on FSD. The Tesla Summon, which is going to be actually coming out very soon with a wide release coming out next week, as well as the CPCA, the China Passenger Association, reporting for some very good delivery numbers for Tesla, which could also set a record for the company in the third quarter fiscal year 24. But again, we do still have about 50% shareholders sitting with a cost basis well above $220 at the moment. Now, coming over to, so this was actually my options portfolio that I was going over in one of my previous videos for all the members. What the heck? We'll just go over that in just a minute here. So I actually did a private members only video. I share every week my options portfolio, and this right here is the actual gains at the moment that I actually shared with all the members. A little bit over 16,000. So this is the portfolio that I've been selling calls and puts on. And again, Nvidia is actually part of the portfolio right now, and Tesla was one of the stocks that I was selling calls on. And this right here is the return of just over 32%. Since May all the way through September, since again the beginning of this portfolio. Now coming over to the more important stuff, this right here, Goldman Sachs mentioning that Tesla FSD is already worth over $1 billion to as much as $3 billion in sales, and they could say that it could be worth over $75 billion by 2030. So that's, again, a pretty bold expectation for Tesla's full self-driving. This right here from Sawyer Merritt talking about how after years of waiting, Tesla has officially launched Actually Smart Summon, or ASS, its next generation Smart Summon feature to normal owners, which is non-employee owners. And Tesla says, buckle up for the ride of your life, except surprise, and you're not in the car. Actually, Smart Summon allows your vehicle to come to you or head to a spot that you choose all on its own. It's like magic, but without the tech, with more tech and less wand waving. And this right here is the Actually Smart Summon. Buckle up. And that's going to be allowing your vehicle to come to you or go to a specific spot that you really want. And there's been a lot of videos floating around over the last 17 to 24 to 48 hours of Tesla FSD. The future is here. The future brought to you by over-the-air software updates. And this right here from Elon Musk. Yesterday, Tesla Actually Smart Summon going to a wider release next week. And this was actually a very, very cool video. I really encourage you to watch. It's about 1:40. Tesla navigating around a Costco parking lot, which can get extremely busy with cars, other vehicles, other pedestrians, and different things and trolleys and whatnot. People using their carts to essentially bring items out of Costco going into Costco. So it's a very, very busy place to test Tesla FSD, and actually performed really well, proceeding cautiously by pedestrians. So Tesla also backed out of a spot after a vehicle waited for it. The car that is seen behind the pillar to the left of the steering wheel stopped to allow the Model 3 operating with Actually Smart Summon to back out of its spot safely, and then sees the pedestrians on the right, and then of course cautiously and safely navigates around them. despite the tight parking lot, and again proceeding cautiously and respectfully with other pedestrians and cars and letting them go, giving them the right of way, which I think is also very, very cool and something that is a huge piece of technology in the works that can be worth, as Goldman Sachs also predicted, $75 billion in sales over by 2030. But even if you take that half of that number, that's still adding a significant amount of money to the top line for Tesla, which is also going to be a higher margin business. It's not a hardware a piece of technology, it's a software, right? So it's really just artificial intelligence doing its work in the background with full self-driving, which is going to be a very, very high margin business altogether. And there's also been the rise of robots. So compounding that, more than a few Tesla watchers were surely cheered by Musk's latest utterances on X. And he says the future is going to be wild. There will be so many robots. Tesla is one of the more active developers of robots, and the market probably took this as a reaffirmation of that commitment as well. Now, when it comes to deliveries, the US EV giant sold about 86,697 China-made electric vehicles in the month of August, including exports to foreign markets, and according to the industry data released on Monday by CPCA. And while this market marks a sequential and year-over-year increase through the first 8 months of 2024, Tesla China sold 587,437 vehicles, which is slightly down about 6% compared to same time last year. And this was from Troy Teslike, whose delivery estimates have been pretty accurate and very much look forward to. So not so much in the US, but Q2 deliveries have been very great in China, and benefiting from the continued 5-year zero interest loan payments to the buyers. And analyst consensus has Tesla Q3 deliveries totaling 458,000 units, up more than 5% versus the third quarter 2023 for Tesla. So again, we had a lot of updates, and the reason why I think this is so important, why Tesla is kind of moving in that direction for full self-driving, with new updates coming out, actually smart systems getting released, on a more wider launch next week, and Tesla vehicles being able to navigate in such busy parking lots, and because this is where the world is headed. This is where safety becomes pretty common when it comes to driving, and it's kind of weird that we actually go through so many accidents, right, in the world when it comes to just simple driving. What is the most common cause of accidents? Distracted driving, right? So most of the accidents that happen over the like in the entire world is because of human error, is because of actual people making mistakes, right? So the top of the list, the distracted driving is the number one cause of car accidents in the United States each year. And though it is a recognized issue, it is becoming increasingly worse. Distracted driving can lead to serious car accidents, often resulting in severe injuries or fatalities. This right here was from NHTSA, so National Highway Traffic Safety Administration in the US, and they did a survey, or basically a study, and estimated 94% of motor vehicle accidents were caused by driver error. Accidents caused by vehicle problems and environmental conditions occurred for very, very few traffic accidents, and the most common human factors or human errors reported was improper lookout, excessive speed, and inattention. So all in all, distracted driving, or just in general bad behavior of driving too fast. Not to mention the drunk driving, and again, driving under the influence of alcohol or whatever it is, it's going to be adding even more risk on the road. So full self-driving and letting artificial intelligence, letting robots, letting basically the car itself drive itself, solves that problem. It takes risks out of the road, right? So even if you are, let's say, going to a party and you've got your own car, then you can rely on Tesla FSD or full self-driving in general. Doesn't matter the brand, whatever that technology is, to bring you home safely, right? That's the whole idea. Because we don't want people behind the wheel if they are drunk, if they are excessive in speed, if they are not following the rules, if they are distracted, right? Because that's all adding a lot of risk back on the road. And the idea with full self-driving at the very core is safety. It's at the very core. Quite literally, it's not even increasing productivity. I think Elon Musk, Tesla have made it very clear that safety comes first. That is the most important thing that they're trying to solve, is taking risk off the road. And that's what's going to get them to success. In other words, adoption and execution. That's what's really going to accelerate both the adoption and execution for the company. They also reported that traffic crashes increased by 16% from 2020 to 2021. So it's only getting worse, from 5.25 million to 6.1 million accidents in a year. And there was also a 10% increase in traffic crash fatalities, with almost 43,000 traffic deaths on the US roadways in 2021. So these are some very, very important things to keep in mind when it comes to just the full self-driving and the benefits of full self-driving moving forward. So coming over to Tesla's technical analysis, this is where we are. Pre-market, we are seeing a little bit of a rally once again, so 2.2%, so $224 is where it's at. However, I want to be very clear that we're still well within the context of a downtrend. So from its 2021 all-time highs of $414, we're still down about 47%. So lower highs and lower lows, and the next resistance really is going to come up to $233. Now, the reason why it's been underperforming for such a long time, for well over 3 years, is because Wall Street really cares about short-term profitability and quarter-over-quarter numbers. And if Tesla is going to take some time to develop these technologies, it's going to take some time for users to really fully realize the benefits of the technologies that Tesla is building, and the adoption is going to be a little bit slow. The execution is going to take some time. Wall Street's not going to wait around, right? They ideally want to beat the S&P 500. They want to beat the market. So they're not going to be in a stock which is going to take some time for things to materialize, for technologies to develop, and for people to benefit from that technology. So once we actually start to see some very active material impact and benefit for the company, and the top line and the bottom line starts to increase rapidly on the back of these technologies, that's when you're going to see a significant inflow, significant institutional money coming back into the market for Tesla. And my sort of expectation is that at that point, you're really going to be wishing to be in that stock, right? To be in that stock. And I'm not asking everyone to be like, have a huge position on Tesla. Of course, if you are a strong believer in the company, if you've got significant conviction, if you've done a full thorough analysis and a deep research on the company and try to understand what is it that Tesla is building, sure, you've got your reasons. But in my opinion, I think even a small position, a small exposure in Tesla for the long term, for the potential for what it could be, I think is a very good risk-reward proposition. We've done the fundamental analysis, we've figured out the fair value, we've figured out the valuation for the company, we've looked at the balance sheet, we've looked at the cash flows, we've done most of the fundamental work, but really it's about being patient, right? That's what it comes down to now, and understanding that these are prices where, 5 years or 7 years, 10 years down the road, we could be looking at back and trying to understand, okay, 224 was actually a pretty good deal for Tesla back then. Now, I would still argue that if none of this materializes, there's definitely a downside risk, because Tesla, from a just automaker manufacturer standpoint, trades at a very expensive valuation relative to its peers. And for those reasons, I think it's really important for us to also understand the risks associated with the lack of adoption and the lack of execution if things don't materialize the way you're expecting. So there's always that downside risk that is also present. And for that reason, we've got that margin of safety built in with a fair value closer to 150s. That's already accounting for a 10% margin of safety. So Tesla's got a pretty good balance sheet, so we don't really need additional margin of safety here for the company. But from a technical standpoint, I think a big resistance is going to be sitting at $233. So that is a level to keep in mind for the company. We're still, like I said, well within the context of this downtrend. And if we are able to break out over $233, then the next target is going to be all the way up here at 267. So that's a level where, once again, there's a huge area of supply. I mean, we've gotten rejected there not once, but twice, 3 times, 4 times. We continue to get rejected here in the 270s to as much as $300. So those are levels to keep in mind for Tesla. And support level is going to stay put at $208. That's exactly what we validated here more recently before rallying back up, and a much stronger area of demand in the 190s, of course, down to as low as 150s. This right here is where my fair value is for Tesla as well. And the goal and the idea is to continue to take advantage of that volatility. Because Tesla and Nvidia are such high beta stocks, I think it's very much possible to sell calls, sell puts, generate some income, while also being very careful with keeping your long-term strategy intact. And that's what I've been doing. Selling puts, selling calls, and Tesla might be a company that I look to sell puts on for the weeks to come. Now, coming over to Palantir, another interview with Palantir's CEO, Alex Karp, talking about how we have deep experience managing algorithms and, by extension, large language models because of the work that our product has been used to power in the classified space, and also talking about how there's infinite opportunities with artificial intelligence, and how Palantir's, of course, product provides a lot of value to its customers, to its businesses, not only by increasing the potential revenue, by identifying opportunities where they can maximize revenue, but also reducing the cost incurred by getting rid of some of the inefficiencies in the organization. So data analytics, using the power of artificial intelligence, they're at the forefront of this entire movement. And there's also a new share called PTIR. This is from Granite Shares. For all the people who want to increase their exposure by 2 times on Palantir, there is a new leveraged ETF of 2x. And I believe it's going to start trading here fairly soon, but this is from Granite Shares, 2x long Palantir daily ETF, listed on the NASDAQ exchange, just under $25. So that is something to keep in mind for you also. And now coming over to Palantir, very nice consistent uptrend. For a very brief moment, it traded back below $30 yesterday, but right now trading at a very good support here, getting validated at $29, something that we have discussed in our previous updates as well. And this right here is the overall uptrend for Palantir. So higher highs and higher lows, and a very nice consistent uptrend for the stock at the moment. So very brief pullback. And right now, this is going to be that support. If it does end up, let's say, pushing higher, $39 to $40 is going to be my target. I think that's a level that we could see for Palantir in 2024 if that momentum carries us forward with a few more earnings reports coming out. But support level is going to stay put at $29 all the way down to $25. And this is a level where I would be a lot more interested in buying more Palantir. I think $20, that's a level where I could see myself selling some puts for the company and buying a lot more aggressively and dollar cost averaging in and around those prices. But my target right now is going to stay put roughly around $40 for Palantir, given how volatile it's been. I think that's a level that we can easily see from Palantir if that momentum carries forward. And again, the last quarter of 2024 tends to be very positive for the entire market as well. So those are some things to keep in mind for these two companies. Let me know your thoughts down in the comment section below for both Tesla and Palantir. And also, make sure that you drop a like and subscribe to the channel. And if you want to get access to our entire options portfolio, what options I'm selling every single week. So far, year-to-date returns have been a little bit over 32%. It's not showing us the entire return for the year, but I've calculated it myself. So I just posted that update in our Patreon earlier today. So make sure that you drop a like, subscribe to the channel, and join our Discord if you want to get access to all the alerts and also the updates in our Patreon. Happy investing. I'll see you all in the next video.